Okay, good morning traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, June 6th. Michael Boutros here with you this morning, guys. Good to be here. Ty, Sarub, Sandy, Pooja, Pete. Good to be with you here this morning. So, still have a big week of event risk coming up, as you guys well know, towards the latter part of the week. So for today on the menu, I'm working with DXY. We'll go over the euro dollar from last night, the Aussie dollar, sterling dollar, obviously crude and nat gas, both responding to those key support regions that we've been talking about over the last couple of days. We will go over dollar CAD, dollar yen, and euro CAD from the previous update as well from Sunday. And that's all I have on my end. It's a pretty short list today. Look, things are kind of in a holding pattern. There's a lot of event risk coming up, so don't be too amped to jump in just yet. Again, also keep in mind that we're just opening up that June opening range, so we should offer, or it should offer rather, some nice guidance as we get deeper into the week. Sarub wants gold and silver. Sure. Gold and silver. Add it to the list. I got it. And as always, guys, feel free throughout the course of the session, if you have any specific questions or trade setups you want to review, as always, jump right in. Okay, so first things first, as we always like to do, just take another look at the dollar index. Here's what the ICE looks like. It continues to dribble lower. So 96.47, that pocket of support just below. Again, that 618 retracement from the advance off last year's low. You have the lower parallels here extending off of both of these January and February lows, giving you a nice little region of pocket support there. Keep in mind, as we noted yesterday, you are obviously marking divergence into these lows as price action makes a new low. The oscillator makes a higher low. Not a tell in time, but certainly telling near term that that downside pressure is starting to wane a little bit. So again, the major event risk is going to be on Thursday as you head into that Comey testimony. You got the ECB, you got the UK elections. For the pairs that we've been following here specifically, heading into Friday, you also do get dollar CAD, which is going to be an upcoming player as you get into that CAD employment report on Friday. So there is a lot to look at. Gary, hey MB, can you take a look at euro yen for me, please? Yeah, I got you. Let me add that to the list, euro yen. Haven't really been following it lately, but let's take a look. No problem. So, long story short, Sandy, Euro Oz, gotcha. I actually like Euro Oz. But for the dollar index, I mean, the game plan remains unchanged, okay? You still have that risk for that spill into 96.47. We've been talking about that. Seems ad nauseum, but that's still the level to get into. As support. Again, here's what the near-term chart looks like. Slope also continues to suggest that that's a nice area of support that you would look for. But again, the divergence we're seeing in near-term doesn't really have me wanting to push aggressive short dollar from here. Just as a disclaimer to those of you who were with me in the webinar yesterday on Daily Effects, that short position on dollar yen I've closed out. That short position on euro dollar, it got spiked out at break even on the overnight spike for the rest of that trade, and then it came right back down again. So none of the broader outlooks have changed. You're just seeing a little bit of a stall here on some of these positions as you get into that major event risk. And again, the first full week of June trade. So keep some of that powder dry as we get deeper into the week. Any questions on dollar index? Again, gunshot approach to the head. If this comes into support here, I'd be mindful of some sort of near-term exhaustion, possible recovery. With the same respect, a break below that level, guys, a break of a descending slope typically will be the sharpest part of the move. So just to highlight, how important of a region this is, if it were to give out a support, you'd really likely see some pretty accelerated drops. Near-term targets would be just that low that you made there on the election. That's 95.89. Then the 786 doesn't even come into that lower parallel from 2011. That's way down here. Okay, now before we get all excited, near-term support. Okay, near-term support, key resistance unchanged, 97.67, 97.87. Initial resistance, just on a very near-term prospect, guys. If you look at the 240 here, or even the 120, it's going to be the the monthly open. Okay, that comes in just at the 97 handle, just below 96.99, and that's going to be our near-term resistance. Okay, so a break above that objectively would be a breach of the weekly opening range, and that's what would give you the recovery play towards that 97.67. Till then, we're still looking to see if we get that final dip into 96.47. Okay, dollar index, again, the ICE dollar index, typically just an inverse of the euro, but nonetheless, definitely a nice gauge of base dollar moves. All right, let's jump into, that was number one. Number two, let's jump into yesterday's update. Here's what the euro looks like at this point. Sandy, you know what? We'll bring up euro Oz right after euro here since we're going to cover the euro pairs. Here's what euro dollar looked like last night. Here's what euro dollar looks like now. We've been talking about all these levels so much, and once they tag, they've been kind of giving us a real quick pullback. So the first level that we talked about last week, if you guys remember, was the high day close right here from October, I think it was. September, which offered some nice resistance last month. There was the break. Next target was 112.85. Okay, I came into the Sunday open here pulling a short real quick as we held below that, just against that. We did take some profit at that 618. Again, stops are at break even, and literally on the spike in overnight trade took me right out before pulling back again. Long story short, this thing is stalling up here. Take it into a 120, take it into a 60. Here's what it looks like. What I wanted to highlight is this, guys. These are your beautiful, beautiful weekly opening range plays. Your weekly opening range is taking shape just below a critical Fibonacci level. That comes in at 112.85. It was the exact highs from Friday. Doesn't get much cleaner than this. Oh, Sandy, you were talking about euro yen? Okay, euro dollar rather? Perfect. So here we are. She says she's still short. Yeah, I would still be. I played a little bit too close to the chest, but you know what? Playing these reversal plays, guys, I'd always rather play it closer to the chest and eat the stop and miss the profit than necessarily try to press a reversal trade and take a loss. Because again, we're fighting the trend, right, guys? It's an upward trend. We've been looking at this for months. It's obviously constructive. When you're trying to play the pullback, you have to recognize that you're going against that and be much more nimble. Typically all my pullback plays or reversal plays off resistance will be half leverage of what my typical trade will be, or maybe 2/3, but not full allottage. Why? Because of that, that discipline that we want to maintain. So we want to always be pressing in the direction of the trend. That being said, the swing setup was really nice. So again, look for support 112.35. That's just a near-term 618 of the Friday of that last range we made off last week's late low. 112.05 near-term support, and this is the where we kind of reassess things. Okay, so if we're going to maintain this ascending slow pattern, this would be sort of a really nice area of which you'd start to look for support. A break below that, and you're looking for correction. So for me, the initial focus right now is on 112.35 and a possible drop into 112. This is where I'd be looking for a reaction, possible exhaustion, and also will be our near-term bullish invalidation level. So if we do see a drip below that, you're likely to see a little bit more of a correctionary stance here on the euro before we continue higher, right? The broader picture still looks constructive. Here's the daily chart. Okay, it's a pretty big region. So there's that 112 handle, basically, right here. And then near term, as long as you stay along above this median line, which offered some nice pivots, we broke messy support, but support nonetheless. Again, bringing it to a line chart looks much cleaner. Okay, break of resistance, check as support, move higher. There's that 1618, near-term support right back at the former median line resistance. So we're not calling for the full-on reversal, but certainly divergence into the highs on the daily chart. You got a trigger here on the daily chart as well. If we start to pull back and move below the monthly open, which comes in at 1242, excuse me, that would be a nice trigger break there with a move below that support and momentum to give us a near-term pullback in euro. Yesterday was holiday here, so I missed all the shorts on the yen as I was out, says Sandy. Yeah, the yen, that was actually the best play. I'm out of that as well. You're coming up on target for the swing trades, guys, so do keep that in mind. right around that 109 handle, but I got around 109.30s where I got out on a limit overnight. We'll take a look at that in a moment. Any questions here on Euro before we move forward? Obviously, guys, ECB on tap on Thursday. No changes expected to policy. The devil's always in the commentary, yada, yada. We'll leave that to the fundy guys to follow. But from a trading standpoint, 1285 near-term resistance, the weekly and monthly opening range taking shape just below that. Doesn't get much cleaner than this. Okay, again, another beautiful opening range for the week. So watch that break. 1200 is going to be the marker that would suggest a little bit bigger recovery to the downside. Okay, that is euro dollar. Number 3, Aussie. Here's what the Aussie looks like on the back of the RBA interest rate decision. So you got some jackknife action, you got some volatility, but the levels continue to hold, and that 74.85, 74.90 region that we talked about last night is resistance. The median line here continues to offer sort of a ceiling for prices. Here's what we looked at last night for the Aussie dollar. So the daily chart really was highlighting a basic 786 retracement. This is just from the near-term decline, guys, off that high that we made last month, right? Nothing too fancy. So I really wasn't going to stress this. It's the near-term chart with this newly identified ascending median line formation. Again, you know, typically when we first add these pitchforks, we don't want to get too aggressive on them until we get some more play in price, which is why I said I didn't want to, you know, rely on it too heavily. But the fact that the median line is highlighting a resistance range that we're looking at already further gives us just conviction to watch this structure. So here it is. You know, resistance held all through the RBA interest rate decision. You got some kickback. Again, you know, your basic resistance level is still being tested here. Nothing's changed on this trade post RBA, guys. I still like it to the upside while above 74.43, 74.40, keeping in mind that the monthly open comes in at 74.29, 74.30. So as long as you stay above this pocket area of support, I do think you look higher. Near-term targets on the upside, 75.15, 75.43 would also be a very nice pivot in price and a basic 50% retracement of the entire decline off the yearly highs. Okay, so really, really nice level. If you take basic parallel off trendline support, just with the lows from last month and this month, take it parallel to the highs here, it also converges on that region alongside the 50 line of the current slope we just added. So the levels are sort of mapping out pretty well. Again, staying constructive above 74, not only because it's a 50, not really stressing the 50, but former median line parallel resistance, now support. And for the current operative slope we just added last night, again, there's the 50 line converging right there. In case that wasn't enough, former channel resistance, which acted as very nice 3-point support, break, should offer some resistance, some support rather. So I love the levels. Continue to look higher while above 74.40. Topside targets of significance is going to be that 75.40, 75.30 level to the upside. Any questions on Aussie dollar? Now, again, it's important to note, heading into the U.S. session, right, you have the dollar index, which may have a little bit, you know, one leg lower down into this region. That would coincide with maybe Aussie taking one leg, you know, on a pullback into the 50 line before moving higher. Long story short, you know, this is the median line right now that we want to be focused on. So if you're thinking about long exposure, just keep in mind you're basically at resistance right here on the immediate term. So if we head into the U.S. session and you get a nice pullback towards that 50 line, look to see if we can find some support. Again, staying constructive above that 74.40 region. Questions on Aussie? Going once, going twice. Stalling a little bit up here, but still looking pretty constructive. Okay. Let's jump into British pound. Sandy's right on it. Here's what the British pound looks like, Sandy. So saying that I'm short sterling too, as the labor is scoring better in the polls, I think you meant to say, Sandy. So I haven't, yeah, I mean, obviously the election is going to be a pretty big it's going to be the big market mover or the big thing that the market's focused on heading into Thursday as far as the pound crosses are concerned. But from a technical standpoint, we've been looking to stay bearish below 29.82. Basic 764 retracement off the highs. You also had the upper median line parallel. Guys, you remember when we added this slope? Here's what the report, here's what we looked at last night with the sterling. Okay, we added this descending slope here back on the 25th. Way back here. We were just coming off the highs. We added this slope and we said, look, it's a little too early, but it highlights a downside bias below that upper parallel. We'll look to see if we can break these and get into these downside targets. 27.55 is kind of what caught the lows. Or we kind of didn't even get in 27.55, 27.75. And then we rallied back up, tested the upper parallel, broke back down, turned right ahead of the lower parallel. Here's what it looks like now. Turned into the lower parallel, moved higher, and that's why our bearish invalidation last night was up here. So yes, nice convincing outside. This is a 2-hour candle, but bring this into an hourly. Okay. Either way, you had a 2-hour outside reversal and a 4-hour outside reversal candle right off of resistance. And here you are coming back into the monthly and weekly open. So, Sandy, if you're holding shorts or if anyone in the room is holding shorts, this is the level still that we need to beat to the downside, 28.55. I noted it yesterday in the piece. That's going to be an objective break of the monthly opening, the weekly open, and the weekly opening range low. So kind of your ideal scenario. And I think if we do get that break, which is my favorite move here in sterling near term, you look for a run on the 27.96 level. Again, same downside targets from the report a couple weeks ago, 27.55. This is the big spot, for the pound. I think this is where I would love to reassert if we were to get down there. A much more aggressive stance for a possible long position on pound. Basic 236 off the highs. You have some swing highs in price. The opening range highs for 2016 or 20. Oh, this is the opening range high for this year. Excuse me. The 50 line. It's just stacked up there. So, long story short, sterling has set a very nice weekly opening range. I'm looking for a break below 28.55 to suggest, again, that you're in that correctionary mode. Very similar to what we're looking at with the euro, guys. Just an exhaustion trade. I think sterling is another one I'd love to be long on a longer term approach. But the immediate risk, in my humble opinion, again, is for another low to come into play here for pound. Questions on sterling heading into the UK elections? Levels look pretty good, unchanged from that piece. Again, for those of you who are new to the room, you can always take a snapshot of any of the charts that you see, clicking on that camera button, top right-hand corner of your GoToWebinar screen. British pound going once, twice, and sold. All right. Crude, here's what the oil trade looks like. So obviously there's a lot of chatter going on, right, about this whole sort of severing diplomatic ties with Qatar. That's, keep in mind, out of the OPEC nations, that's the smallest producer. So as far as its impact on price, the geopolitical impact is really what the focus is right now. I really don't think that we're seeing price necessarily react to that data. Keeping in mind that we talked about this yesterday, 46.45, 46.88, major critical area of near-term support here for crude prices. Why? Well, very, very clear, and you guys know this is my favorite setup. 100% extension off the high. You got a 618 retracement off the low. Convergence of both of those on the operative median line that we've been following. Here's the daily chart. Right here. Right here. Add to that this is, in fact, the swing lows that you made back here for the month of March as well. Okay, so just a lot of pent-up sort of support near term here for crude prices. I wouldn't be surprised to see a pop higher. The objective bias does stay bearish while below the monthly open. That's what I would need to breach as resistance to even start to think about a little bit more of an aggressive topside stance. So yes, heading into the U.S. Open today, shorts are at risk into 46.40, 46.80. Look for a reaction into this pocket zone of support. Resistance and bearish invalidation is still at 48.50. This monthly open, 50 line of the descending pattern, and the weekly opening range highs. But I would be cautious about chasing crude prices lower from here. If you are holding shorts, 46.88, 46.45, that zone, it was where I would start to look to, skim some of that position off, maybe bring your stops down to the overnight high, which in fact is right at the weekly open. So the same exact region of which you would want to be careful of a breach of resistance, that's in fact where the overnight high came in. Sandy says she's still holding from 49. Not bad. Nice. So Sandy, same thing for you. I love the entry, but as far as your limits on the downside, I'd really be mindful of this 46.45, 46.88 region. Okay, hope that helps. Any questions on crude? All right. Moving right along, Nat Gas is another trade that we've been following, also approaching its region of near-term support. Here's what Natty looks like. Look, a little bit cleaner, in my humble opinion. Here's what it looked like in last night's report. So again, crude prices, guys, here's just the chart from last night. No change. You rebounded, tested the weekly open, and you came right back. So this is still the support zone that you're looking at for crude prices. As far as nat gas, again, we were talking about building divergence as we were testing support. And obviously price action making a lower low, the oscillator making a higher low, price coming into a major support confluence at the 1618 extension from the decline off the highs. You had the lower parallel of this wider descending median line formation. And certainly was an area of interest for possible exhaustion here as this thing continued to plummet lower. So we're getting that rebound here today. Okay, and this is why I'm a little bit more cautious on trying to chase crude too, right? So guys, look at this on a closed basis. That's beautiful. That is beautiful. And this is a daily chart, right? You don't see that too often. So again, a very nice confluence of fib levels. We cited 286 and 291, both regions and areas of interest for possible exhaustion, and you're getting that now. So the initial resistance is still going to be at the monthly open. Monthly open comes in at exactly at the 3 handle, essentially, with just higher. I didn't really stress this in the piece yesterday, but I do want to just show you this huge confluence of a 38.2 retracement, basically the closed lows that you made here in April, and the 200-day moving average, all converging right here with the monthly opening range high. So as far as key resistance is concerned, this is still going to be, that's just above the 3 handle, 306, another 6 cents. I did just want to highlight that because again, your weekly opening your monthly opening range highs at 38.2, the 200-day moving average, both pretty critical here. I would listen as resistance levels of yours worked pretty well. Cheers, Sandy. I do my best. They're not my resistance levels, they're the markets. I'm just helping you guys find them. So keep that in mind here for the rebound in nat gas. Again, here's the near-term picture, right? And, again, just looking at slope, that 50 line looks awfully sexy there. Comes in line, the monthly open, near-term 236 retracement off the high also gives you 3. So any way you slice it, right? There's 306, and that's the one I think will be a little bit bigger just because, again, you have that 200-day moving average in there as well. But this is going to be the near-term resistance you want to respect heading into the U.S. session. If we pop through this, same scenario, right? You'd be looking for that 306, possible stretch into the median line, And then this is an area of which we'd start to look for possible exhaustion, reassertion on the short side for nat gas. Pretty big pivot in price. You see that to the left there as well. Always try to be objective, guys. Never take, Mike Boutros' word or Jamie's word for anything. Always look back in price and let that talk to you. Odds are, hopefully, that we're on the same page. But again, price action speaks louder than anything else. So I think levels are pretty clean here on nat gas. Any questions on any of those setups from last night's piece? That was number 5 and number 6. All right. Okay. So let's take a quick segue into the previous update on dollar CAD, dollar yen, and euro CAD, and then I will jump into your questions on gold, silver, and euro yen. We are making good time today. So here is the previous update on some of the other dollar crosses that we've been following. So dollar CAD, again, I do want to highlight that we do have employment data coming into the close of the week here. Here's what dollar CAD looks like right now. Dollar CAD, dollar CAD, dollar CAD, where art thou? All right. So, again, let's start off with the daily chart. And here is the intraday chart. So, I'm not going to lie, I've been kind of irked here by dollar CAD a little bit. I've been trying to get into this trade for a while, but it, did this last month with a nice strong rebound here. Kind of threw me off. We've been favoring the short side, if you remember, heading into May for the longest time. The rebound took a little bit longer than expected. The reversal off resistance was pretty nice, but we're still above the 2017 open at 134.35. And if you guys remember, that was still a pretty big level for me. Now, it so happens that that level also converges on basic slope support now, coming off the lows that we made in late February. All right, so I'm not really thrilled to do anything per se here, but I did want to highlight that the monthly opening range is taking shape between critical levels. And this is your favorite plays. While we don't have anything pressing necessarily to do right now in the immediate term, certainly the range that's taking shape into the start of the month should be rather telling. So again, 134.35 converges on that lower parallel. 135.75 is going to be the close high that we made back here. Also a nice little pivot of a parallel of the same slope that we've been following. I know it was messy here, but again, I always want to see what the touch points look like. Here's one touch point at the low. So I'm taking it off of a concerted low. Again, held as support. On a closed basis was resistance. On a spike was perfect support. On a closed basis, support. The break saw acceleration. The breach saw acceleration. The break saw acceleration. And here's the pivot right off of. So at first glance, you look at a trend line like that, and it's like, man, that thing is messy, right? But when you go through and you see how the market reacted, well, it actually holds a lot of merit. Not to mention, this slope also caught the highs. So I'm willing to still look lower, below 35.75, 35.60, still going to be my my bearish invalidation level. That also, again, all those convergences there would require or necessitate a breach of the monthly opening range high. So as long as you stay below that, this is the focus range. I'll favor shorts within that range. We need to see a break below 35.35 to get this thing going. Okay. Initial targets would be 33.80. Just lower, you have the 100-day moving average. Be mindful of that 200-day moving average at 33.20, and then a huge 618. That's on there twice for some reason. Whoops. At 32.83. Questions on dollar CAD? Bear with me one sec, guys. Just want to see what this looks like. That's a stretch. Here's what the near-term chart looks like. Okay, your 240-minute highlights again, pretty tight weekly opening range. Here's your monthly open as near-term resistance. So again, 34.98, we're just calling it 35, is actually a 618 of just the near-term decline off Friday's high. And again, there's that key support into 35. On the scalp chart, just to highlight last week's low and whatnot, you have 34.27 to 34.40. Okay, 34.35 is right slap in the middle of that. Questions going once. Horace says a break below what? Horace, did I miss your first part of the question? What was that question on dollar CAD? It's 34.35, 34.30, this region here. Does that make sense, Horace? You have the yearly open there too. He says, got it. Awesome. Good stuff. He says, yes, thanks. More than welcome, sir. My pleasure. Okay. And that is dollar CAD. So keep your eye on crude prices too. You know, this is why I'm a little bit more hesitant to get too aggressive on those, just because of what's been going on with the congruent markets here. That is dollar CAD number 7, dollar yen. Best player so far this week. It's funny because the markets have stalled out in a lot of these majors that we've been following, and leave it to dollar yen, the abomination, to be the best play of the week. Closed out a little too early of this one, but still continuing to move pretty well if you're holding shorts. I'd be mindful of that lower parallel that we'll talk about in just a moment. But again, the daily chart, here's what dollar yen looked like earlier in the week. Okay, here's the Sunday update. We were looking to stay bearish below that upper parallel. Initial target's at 109.60. So that's just below that is where I jumped out. The 2017 low day close comes in at 108.90. And from a daily trading standpoint, that's still my, a big level I'm looking at. That's your low day close that you made back in April. We've made it below the 200-day moving average. I think it's got steam still. I wouldn't be jumping into fresh short exposure from here, but certainly if you're holding any positions, you probably want to leave a little on to see if you can't get that stretch. But everything looks pretty good here on dollar CAD. I can't complain for once, or excuse me, on dollar yen. All right. Pretty nice move. And again, we noted an outside day reversal candle off of resistance, typically going to be a very bearish development. Okay, and that's sort of what we were looking at heading into the start of the week. That Friday outside day reversals, I'll tell you, those tend to work really well when they come right off resistance. A lot of times you'll see people, and this is where interpretation starts to filter into your discipline. When we see an outside day reversal, it shouldn't be right off your bat you want to fade that. It matters where it happens. You want to see an outside day reversal to the downside at resistance, okay? You want to see an outside day reversal to the upside at support. A lot of times you'll get an outside day reversal to the upside at resistance. Those are not the same. You don't want to play those the same way. Those tend to be, exhaustion trades. So there's certain different ways that you can interpret it. But long story short, dollar yen turned out to be a nice reversal off resistance. Here's what the intraday chart looks like. No change to any of those levels as well. So again, just to bring up, zoom in a little bit more here. Just to give you a little bit of frame of reference of where we are. 110.50 is right here. So again, the weekly opening range was pretty tight. There's the break. 110.10, 110.11. Again, this is where I kind of got out. 109.60 is where my limit was, so I'm out 25 pips ago. And then there's the lower parallel. So watch 109.20. You could get a little bit of a rebound. If we get down there, I would be looking back up here for possible resistance. Let's see if we can't get that stretch into 108.90. But yeah, it turned out to be a pretty nice move, huh? Karthik says, great trade. Cheers, Karthik. Yeah, the swing side caught it too. So, Jamie Also is looking for some near-term support just a little bit lower, but finally dollar yen. You know, when it makes a move, it does make a move. It's just that you get this a little bit for a while, some chop sideways. You kind of just need to sit in the trade. Even for a guy like me to sit in a trade for 3 days, guys, that's, you know, that's pushing it. So finally getting a move here in dollar yen. Look for near-term support at that parallel. And as far as trying to fade this, not a trade I'm interested in by any means, as long as the momentum stays in oversold territory. You know, do not try to get cued on this one. If dollar index gets into that key zone of support, okay, 96.67, 96.60 area, and you start to see a little bit of a rebound, that might be a nice move if dollar yen comes into this trend line. Might be a nice little rebound. But in general, as long as the momentum stays in oversold territory, specifically on the near-term time frames, you do not want to fight this. Even in a 30-minute, it's deep in oversold still, or right there in oversold. All right. Wouldn't be surprised if we do come into that trend line, though, and do find some support. So I'd be cautious about chasing this down here. Sandy says dollar yen is at the weekly S2 and the monthly S1, so might rebound. Sweet. Where are those levels, Sandy? Just lower from here or right here? Right there? Okay. Okay. So it kind of lines up well with that median line. Not bad. Yeah, it was a good trade. So let's continue to stock dollar yen here. See if we can't get another position. Again, broader focus still remains lower at this point. By the way, at this point, I'm going to bring down the bearish invalidation level to here. So when we started the week, bearish invalidation was in the region just above 111.45. I'm going to go ahead and bring down bearish invalidation at this point to 110.85. That would necessitate a break above the monthly open, which is at 110.75. All right. Whoops. Don't want to do that. That is dollar yen going once, going twice, number 8 for the session. Last but not least, from the updates that we've been following is Euro CAD. Here's what Euro CAD looked like on the Sunday update. And here's what Euro CAD looks like now. Actually, we could cover Aussie Kiwi too in a moment, but here's what Euro CAD looks like. The only thing I wanted to highlight here is obviously we've covered Euro, we covered CAD. Euro CAD has kind of been a nice little thing that we've been watching. A little bit bigger of a range, but we've been talking about that 52.20 barrier for weeks. Guess what? We probed through it on Friday. It failed. You didn't get an outside day reversal or anything as convincing, so I didn't want to kind of like jump into this early in the week, but the Sunday short was actually the best play on the Euro crosses as well to kind of get that pullback. So 52.20 held, and you got a slight pullback, getting it as deep as 51.20 to 100 pips to the downside, and here we are starting a range bound just below resistance. So guys, look, you know, there's not really a crazy pressing trade here in my opinion, but I'm looking for a little bit more of a concerted snapback, just like in Euro. And if the CAD does materialize with a downside break, some of that CAD strength in dollar CAD, then this might be a decent pullback play back to 50.20. That being said, long side is still at risk while below 50.20. You know, I was looking for a break of the weekly opening range. That's not going to do it for me. You know what I mean? Kind of slipped below, and now we're recovering back into the monthly open, which is right here at 51.75, 51.76. Yeah, I need a little bit more than that to try to fight this, you know, broader advance. Keep in mind that's the third reference point of divergence. Higher high, higher high, higher high, lower high, lower high. So I am looking for a possible turnaround here, a spill over to the downside. I just need to see a little bit more conviction on both momentum turning and as price action. I'd like to see a little bit more of a concerted break of the weekly opening range. So if this thing probes back towards the monthly open or the weekly open comes in at 52. You know, if you can get a stop against 52.20 or the highs here, I would possibly be interested in trying to play another short on this. But as it stands right now, I'm kind of just going to sit out and see how we can get a little bit more of a definitive turn off this resistance. Questions on EuroCAD? No change to any of those levels that we highlighted earlier in the week. Okay, that completes my list. Let's jump into your questions. Saru wanted gold and silver. Here's what commodity block looks like. So the gold trade, you know, what are you looking at here, Saru? The breakout materialized, my friend. 1278 was my last line in the sand. 618 retracement of the entire spill down from the highs that you made in 2016. You had the outside, it wasn't an outside day, but you had the reversal day close subsequent to the highs that you made here in April. And the biggest thing was obviously the slope. We talked about this slope, right? This is the same slope of, the decline off of the all-time record highs in 2012, or 2011. So it's the same, it's the same slope as this, extended off the high from last year. And that's sort of the last break, guys. Well, let me take a step back. This needs to close up here, right? If we get something like this, where the market closes the session way below, this is all null and void. But as it stands, if we were to close at these levels, yeah, you should be looking at 1303, just higher. You have this region, 1310. Basically, what I'm looking at with this, guys, is slope support off of here. This is an operative slope you need to pay attention to. Why? Because it's not just 2 point, it's 3 point. Remember, 2 points is speculative, 3 points is confirmed. So if we take a parallel off that, off the high, that comes in just high around 310. Longer term, if we take just some trend lines here off of the lows from 2015, 2016, extend that off the low from 2015, you can see a pivot, 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 and that comes in right in line with the May high, and that's 1303. So this whole region, 1303, 1310, is sort of where I'd be looking for initial resistance. But wait a second, not only do those slope lines come here, look to the left in price, guys. Look to the left in price. Right? That's conviction. Slope identified a major pivot in price that we saw here, catching the lows in September of 2016. Again, during the course of that month, break saw acceleration, resistance held like a charm, and rejected price quite strongly. That's right here. So the level is very, very clear. You want to stay constructive while above the monthly open at this point, which comes in basically in line with last month's open. Tricky trade here for gold. As far as trading it, Sarub, I don't know how you'd want to get in on this, man. Even on a near-term prospect, maybe a pullback, into the highs, former highs, 1283 would sort of be how I would, if someone was pointing a gun at me and told me how to trade this, that's probably what I'd be looking for initially. But I'd have to update the intraday charts for you here, but that's basically what you'd be looking for. This region right here is pretty critical. Yeah, that's how I would do it, Saru. Talk to me about what you're confused about. He says, I'm confused. I'm waiting for a pullback to get long. Yeah, that's how I would play it. Am I catching you right there, Saru? First things first, we need to close above 1278. That's one thing. Once we get that close, you want to stay constructive above 1283, in my humble opinion. That's just objective. Again, forget what Mike Boutros says. Here's price action start the week. You set up a weekly opening range. You broke the high. You saw acceleration on the pullback. You stay constructive above that. Also happens to be basic trendline support. All right. He says, got it. Thanks. You got it, sir. And silver. A little bit of a tougher call here because you're still haven't made a break with definitive price action of this key resistance confluence that we talked about yesterday. Yeah, I mean, just from slope analysis, just from a slope standpoint, I could see this traveling a little bit higher. So again, I want to leave trend lines that are still operative. And I guess, guys, I keep reviewing trend line analysis with you stuff because I'm writing pieces right now, some EDU pieces for Daily FX. So it's still fresh in my head, the sort of training aspect of it. But look, this pitchfork was pretty clean. I don't want to stress it too much, but the break of the lower parallel saw it as resistance, and that converges on this red one, which is basic trendline support. So, 1780 on a stretch, but I'd be cautious again. Same thing here about trying to chase this higher. From a trading standpoint, I don't know how you'd want to play this, Sarub. Again, same thing. I'd actually be interested in fading a rally into this region for a near-term pullback, but ultimately it's a constructive trade. I mean, you're essentially breaking out of a descending pattern. And you're within the confines of an ascending median line or just ascending slope off of the May lows. So something to keep in mind there. Not bad. Resistance, 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 break, saw acceleration, support. A little messy there. Keeps the focus higher now, well above 1741, 1733. This region here. He says, I took a short today at 1770. So if you're trying to fade the rally, again, I would use some caution. Okay, I would use some caution. On a target for that, it would be 1753 in my humble opinion. That's the weekly open. Wouldn't get more aggressive than that. This is sort of the key support zone, as I noted earlier. But on that short, Sarub, just keep in mind that this thing could pop into 1780 or higher above that. Wouldn't necessarily get shaken out, but that's where I would want to be out of any short exposure if we get above this level, because that opens up 1800 or just the 18 handle, and I don't know if I would want to necessarily sit through a short on that rally. All right, he says, got it. Right on, Sarub. Cheers, mate. Okay, Euro Yen. Who was that for? Dun, dun, dun. Euro Yen was for Gary, I think. Gary, here's what Euro Yen looks like. Let's take a look. I actually haven't looked at it this week yet. Let's see where we are. Okay, let me clean this up a little bit. This is pretty big for me, actually. A move back below 123.40 was kind of my line in the sand. So guys, this is your yearly open. Okay, this is the yearly open for 2016. Excuse me, for 2017, for this year in Euro Yen. So you're basically unchanged on the year. It's testing former slope resistance, multi-year formation as support, and the yearly open. This is not a trade that I would be, trying to get involved with right now, especially on a short term ahead of major key event risk from Europe and the yen, which is going to react obviously to what's happening here in the United States. You have the Comey testimony on Thursday, so you're likely to see yields in general start to flash around. But yeah, I wouldn't be messing with this thing here. Is there something specific, Gary, that you're looking at with Euro Yen? Is there a bias that you have? Look, inherently, if you put a gun to my head right now, I would say look lower. Um, Again, that's just a gunshot approach. Why? Well, I think Euro is on the way for a pullback. We've been playing the downside of dollar yen, so it kind of makes sense. I think dollar yen's coming to support, so you could see a little bit yen weakness, give this thing a rebound, which is why right now, like I said, this thing's at support. Here's what the 120 minute looks like. Here's what the 240 looks like. It's the same level, same slope that we broke through. Was messy on the upside, but we offered support last week, and here we are right now. So I don't really have a play for you on this one. I would say, respect that low near term. Again, this being also, let me add that, the yearly open. Where does that come in? Basically right here, right? And last week's low. Sandy, you're absolutely right. Yep. There's a lot here. I just wish it had some structure to it. Hold on. Is there anything here I could even work with? Not bad. The only thing I would highlight here, I don't necessarily think the median line necessarily has been all that fruitful, but that 50 line, pretty nice to those, catching those lows there. Okay, I'm going to have to track this one. I don't want to necessarily put this up as a setup that we're going to be, that's a conviction setup yet, but I do think this play here, I'm going to put this in a different color, just to kind of look at this. I'm going to be tracking this today for you, Gary. I want to see what pans out. If this holds, you'd look for resistance essentially at the median line, which is here. But I'm trying to see if I can get some fib levels for you. Hold on one sec. Yeah, there it is, 618. Near-term resistance. Downside targets on a break, 122.67, and then the lower parallel, which comes, right in line with those highs. That's pretty nice. There we go. Now we're getting somewhere. So again, Gary, I will do some more work on this, but in the meantime, these are the levels I'd be paying attention to. If you want to take a snapshot of this, stretch it out for you a little bit. Near term, these are what I'd be looking at. 123.69 is near-term resistance. I'll count that also as bearish invalidation for the immediate drop here. Broadly speaking, your monthly and weekly opens are stacked up with the 50 line here. That's sort of the bigger level of resistance. But near-term resistance, downside targets, bigger downside target would be right here. That pivot high, but the lower parallel. That takes you to like 122, basically. Does that make sense? Info very clear as usual. Cheers. I love that, Gary. Cheers. I appreciate that. One last thing, and I don't want to make this chart too cluttered, but one thing I always like to do is, sometimes a pitchfork can be, you tend to start to look to what you want to see versus what is there. So to keep it as basic as possible, sometimes I just like to do this and see if we get a convergence with any of the levels that we're looking at. And point in fact is, if that does end up being an operative slope, the level that we're looking at in time is already a level that we're highlighting. And that's what I want to see. Okay? So 122.67, we just talked about it. That's converging on that parallel. Cool. All right. So I'm not going to stress these, but just wanted to show you a little trick there that you want to give yourself a little bit more conviction on the move. Okay, Euro Yen. Last but not least, Euro Aussie. Did someone ask about Euro Aussie, or was that a mistake? Let's take a look at where Euro Oz is. It's me, says Sandy. All right. Um, oh, this thing. Right. Yeah. Okay. Um, I got completely faked out on this. If you guys remember, 151 was a huge region of resistance. I was trying to play the short against. Aussie had different plans. I have no problem, telling you I stopped out twice on this trade last week on the breach above 5105. It was looks to me like a false break. You went right through it. Confluence resistance with slope, 50% retracement, a decline off the highs you made in 2015. It lasted a day before you put in an inside day on Friday, and then yesterday it took you well below the 51 handle again. Overnight trade, 51 handle was resistance. So I am still looking for the pullback to materialize a little more. I think that Aussie strength at this point is kind of getting tired. So with that said, I think we need to rely more heavily on a euro pullback to complete this pullback, to complete the euro Oz pullback towards this support region again. Major support still. Nice. Sandy's short both of these on the sterling Oz and euro Oz. Well, keep in mind again, Sandy, I get a little concerned to stack up a lot of trades in one direction. So you're pretty hefty on the long side of Aussie there, right? So just keep that in mind. If one of those trades start to turn, you might want to take a little more protective stance. But you're in the money, so what a nice setup. Yeah, I mean, I'd be looking for that stretch into this parallel. Let me see what this looks like on the intraday. 1, 2, nice pivot, comes in just ahead. Yeah, I'd be looking like 149.55. That's not bad. I don't mean to make it that obnoxious color, so hold on. So that further highlights, same level. Again, both of these. 150.75 is what I'll mark on this one as the, or whatever this high is. What is that? 150.75, yeah. That's what I would mark as near-term bearish invalidation. I know we probed above that yesterday here, but if we're to respect this near-term slope, which it looks like it's actually pretty decent as resistance, the 50 line caught support pretty decent. The median line is what I'm looking at, has been a pivot, right? So the break saw acceleration, the breach saw acceleration. The break here should, in fact, see acceleration to the downside as we open U.S. trade. So that's what I got here on Euro Oz. That makes sense? Level's still pretty good. Yeah, I don't blame you. Sandy said it's been a difficult trade, this pair. Yeah, Euro Oz has been difficult, and that's partially on my side because I didn't really get so aggressive on the short side of Euro. All the pairs were into resistance. Euro dollar was into resistance and just plowing through. It's a very difficult trade to try to fade. But with the Aussie bounce that you got and that break below the monthly open, I think that was the tell. At this point, you're getting, it does look like you're seeing a break of the median line, which should offer acceleration like I just said, but momentum, that's some, pretty radical divergence. I'd want to see that start to sink back below 30 there to give us a conviction downside. But I think risk is still lower below 50.75 on the near term. All right, and guys, with that, brings us into the 9:30 slot. I'll have to wrap it up again. Keep in mind, Jamie will be on tap a little bit later in the session for the midweek strategy webinar, and again at 11 o'clock. And I will be back tomorrow morning at 8:30 for another intraday session, guys. Best of luck trading. Keep your eyes peeled for some of the headlines that'll be coming out. And again, major event risk towards the end of the week, so wouldn't get too stacked up just yet. We're opening up the June opening range, and we're likely to get a lot more clarity as we get deeper into the week. Best of luck trading. See you guys tomorrow morning. Cheers.